Hey everyone, welcome back to the channel. Today, we're diving into a topic that's been buzzing in financial circles, something I'm calling the silver warning for 2026. Now, before we get started, remember, I'm not a financial advisor. This video is for educational and entertainment purposes only. Always do your own research and consult with a professional before making any investment decisions. So, what's this all about? Why 2026? Well, several major trends are converging that could create a perfect storm for the silver market. It's not just about one single factor, but a combination of supply, demand, and global economic shifts that are pointing towards a potentially explosive future for silver. Let's start with the demand side. Silver isn't just a pretty metal for jewelry and coins. It's a critical industrial component, and its industrial demand is set to skyrocket. Think about the green energy revolution. Solar panels are a huge consumer of silver. Every single photovoltaic cell needs silver paste to conduct electricity. As countries around the world push for aggressive climate goals and ramp up solar installations, the demand for silver from this sector alone is projected to grow exponentially. We're talking about a massive, structural increase in demand that isn't going away. Then there's the electric vehicle boom. EVs use significantly more silver than traditional internal combustion engine cars. It's in everything from the battery management systems to the onboard electronics and charging infrastructure. With major automakers committing to all-electric lineups by the end of this decade, the demand from the auto industry is another powerful tailwind for silver. And it doesn't stop there. 5G technology, artificial intelligence, and the broader Internet of Things all rely on silver for its superior conductivity and reliability. As our world becomes more connected and electrified, the need for silver and all our high-tech gadgets and infrastructure will continue to climb. So, on the demand side, we have this trifecta of green energy, electric vehicles, and advanced technology all pulling on silver supplies. This isn't speculative, it's based on global megatrends that are already in motion. Now, let's flip the coin and look at supply. This is where things get really interesting. For years, the silver market has been in a structural deficit. What does that mean? It means we are consuming more silver than we are mining. This deficit has been growing. And according to reports from institutions like the Silver Institute, we've seen record-breaking deficits in recent years. Why is this happening? Well, finding new, high-grade silver deposits is becoming harder and more expensive. The low-hanging fruit has already been picked. Most new silver production actually comes as a byproduct of mining for other metals, like lead, zinc, and copper. This means silver supply is often inelastic. Miners can't just decide to produce more silver on a whim. They have to mine more of the primary metals, which depends on the economics of those markets. Furthermore, geopolitical instability and stricter environmental regulations in key mining jurisdictions can disrupt supply chains and make it even more difficult to bring new silver to market. We've seen how fragile global supply chains can be. Any major disruption in a top silver-producing country like Mexico or Peru could have a significant impact on global supply. So you have this widening gap. Industrial demand is soaring, while the mining supply is struggling to keep up. This fundamental imbalance is the core of the argument for a major price movement in the coming years. For a long time, this deficit has been filled by above-ground stockpiles. But those stockpiles are not infinite. We are drawing down inventories at an accelerating rate, and at some point, something has to give. This brings us to the monetary aspect of silver. For thousands of years, silver has been money. It's the other precious metal, often living in gold's shadow. But during times of economic uncertainty and currency debasement, both gold and silver have historically served as safe haven assets. Let's look at the global economic picture. We're facing persistent inflation, rising government debt levels across the globe, and a general sense of unease about the stability of the traditional financial system. Central banks have printed unprecedented amounts of money, devaluing fiat currencies. In this environment, investors often flock to tangible assets, things you can hold in your hand, to protect their wealth. While gold gets most of the attention as the ultimate safe haven, silver offers a unique proposition. It is sometimes called the people's money or poor man's gold, because it is much more affordable on a per-ounce basis. This accessibility means that when the general public starts looking for protection from inflation, silver is often the first and easiest entry point. Think about the gold to silver ratio. This ratio simply tells you how many ounces of silver it takes to buy 1 ounce of gold. Historically, this ratio has been much lower than it is today. A return to the historical mean would imply a much higher silver price, or a much lower gold price, or a combination of both. Many analysts believe this ratio is due for a correction, which would favor silver. So why the specific warning for 2026? It's not a hard and fast prediction, but a convergence point. By 2026, many of the aggressive green energy and EV targets set by governments and corporations will be in full swing. The industrial demand pressures we talked about will be much more acute. The supply deficits, if they continue on their current trajectory, will have eaten away a significant portion of the remaining above-ground stockpiles. At the same time, the consequences of the massive money printing and debt accumulation from the early 2020s could be reaching a critical point. If inflation remains sticky or if a major credit event occurs, the flight to safety into precious metals could accelerate dramatically. So, 2026 acts as a symbolic time frame where these three powerful forces: unstoppable industrial demand, constrained mining supply, and a potential crisis of confidence in fiat currencies could all peak simultaneously. It is the point where the industrial world and the investment world might find themselves fighting over the same limited pool of available silver. When a market is in a structural deficit and a wave of new investment demand comes in, prices don't just go up linearly. They can go parabolic. We've seen it happen in other commodities before. When industrial users and investors realize there simply isn't enough physical metal to go around, a frantic scramble can ensue. This is the scenario that the silver warning for 2026 points towards. What does this mean for you? Again, this is not investment advice, but it's crucial to be aware of these dynamics. It means understanding that silver is more than just a shiny rock. It's a critical, strategic metal at the heart of our technological future, and it's also a historical store of value. The disconnect between its critical role and its current price is something that many believe cannot last forever. Whether you're an investor, a tech enthusiast, or just someone curious about the future of our economy, the story of silver is one you should be watching closely over the next couple of years. The setup is there. The trends are in motion. The question is not if, but when the market will wake up to this reality. The potential for a significant repricing of silver is very real. The combination of its industrial necessity and its monetary properties makes it a truly unique asset. As we march towards 2026, keep an eye on the supply and demand reports. Watch the inventory levels at major exchanges like the COMEX and LBMA, and pay attention to the global economic climate. All the signs are pointing towards a very, very interesting time for silver. Thanks so much for watching today. I hope this gave you some food for thought and a new perspective on this often overlooked precious metal. What are your thoughts on the future of silver? Let me know down in the comments. I read all of them. If you found this video valuable, please hit that like button and consider subscribing so you don't miss our future deep dives. We'll see you in the next one. Have you ever heard the phrase, history doesn't repeat itself, but it often rhymes? Well, when it comes to the world of finance, and specifically precious metals, this couldn't be more true. Today, we're diving deep into a topic that's been buzzing in certain financial circles, something I'm calling the silver warning for 2026. Now, before we get started, let me be crystal clear. This isn't about fear-mongering or making wild, baseless predictions. This is about looking at historical patterns, current market dynamics, and potential future trends to make informed decisions. So, grab your coffee, get comfortable, and let us unravel what could be one of the most significant opportunities or warnings for silver in the coming years. To understand where we might be going, we first need to look at where we've been. Let's rewind the clock a bit. Think back to the late 1970s. We had soaring inflation, geopolitical instability, and a general lack of faith in traditional currencies. What happened to silver? It went on an absolutely legendary run, skyrocketing to nearly $50 an ounce in 1980. People who had positioned themselves in silver saw life-changing gains. Fast forward to the period between 2008 and 2011. After the global financial crisis, central banks started printing money like there was no tomorrow. Sound familiar? Once again, investors flocked to hard assets as a store of value, and silver surged, once again kissing that $50 mark. Notice a pattern here. Major economic turmoil often precedes a significant move in silver. It acts like a financial seismograph, detecting tremors in the global economy long before they become full-blown earthquakes. So, the big question is, are we seeing similar tremors today? I think the signs are impossible to ignore. We've experienced unprecedented levels of government spending and money printing globally over the last few years. Inflation, which was once called transitory, has proven to be sticky and persistent, eating away at the purchasing power of our hard-earned money every single day. On top of that, geopolitical tensions are simmering across the globe, creating a landscape of uncertainty. These are the classic ingredients that have historically cooked up a major rally in precious metals. But there's a new, powerful ingredient in the mix this time, one that wasn't as prominent in previous cycles. The green energy revolution. This is the industrial side of the silver story, and it's absolutely massive. Silver is not just a monetary metal. It's a critical industrial commodity, and its number one industrial use. Solar panels. Every single solar panel manufactured needs silver. As the world pivots aggressively towards renewable energy to combat climate change, the demand for solar panels is exploding. Countries and corporations are pouring trillions of dollars into this transition. Think about the sheer scale of this. We're talking about a global, multi-decade megatrend. This isn't a fad. It's a fundamental shift in how we power our world, and silver is right at the heart of it. But wait, there's more. Let's talk about electric vehicles, or EV. Each EV uses significantly more silver than a traditional internal combustion engine car. It's used in everything from battery connections to circuit boards and heated windshields. With governments around the world mandating a switch to EVs, the demand from this sector is also set to soar. And we haven't even touched on 5G technology, artificial intelligence, and all the other high-tech applications that rely on silver's unique properties as the most electrically conductive and thermally conductive metal on the planet. This isn't just one source of demand. It's a tidal wave of demand coming from multiple, powerful, and growing sectors of the economy. This dual nature of silver as both a monetary safe haven and an irreplaceable industrial metal is what makes its story so compelling right now. So we have this picture of skyrocketing demand. But what about the other side of the equation, the supply? This is where things get really interesting, and frankly, a bit concerning. Mining for silver is a tough, expensive, and time-consuming business. It takes about 10 to 15 years to bring a new silver mine from discovery to full production. You can't just flip a switch and get more silver. For years, the price of silver has been relatively low, which has discouraged investment in new exploration and mine development. Many of the world's largest primary silver mines are getting older, and their grades are declining. This means they have to dig up more rock to get the same amount of silver, which costs more money and energy. Furthermore, over 70% of the world's silver supply comes as a byproduct of mining for other metals, like lead, zinc, and copper. This means that silver production is often dependent on the market for these other metals, not on the demand for silver itself. If the price of zinc falls, a mine might scale back production, and the silver supply that came with it simply vanishes, regardless of how high the demand for silver is. We're facing a potential structural deficit, where industrial and investment demand consistently outpaces what the mines can produce. The vaults and stockpiles can only fill the gap for so long. Eventually, something has to give. When unstoppable demand meets an immovable supply, basic economics tells us that the price has a long way to go, and that direction is up. So, why the 2026 warning? Why that specific year? Well, nobody has a crystal ball. 2026 is emerging as a potential focal point. Many of the aggressive green energy and EV adoption targets set by governments and corporations are set to ramp up significantly by the mid-2020s. The effects of underinvestment in mining exploration from the past decade will become even more pronounced. The accumulated supply deficits could reach a critical point where they can no longer be ignored by the mainstream market. Think of it like a dam. For years, the pressure has been building. More and more water representing demand is pushing against the dam, while the dam itself representing supply hasn't been reinforced. Dos.